Talk about the possible downturn, globally or in the United States. A lot of talk about that in Davos. How do you see it, and what likely effect could that have on credit?
Thanks, David, very much for having me. So where we are in the cycle right now is we see a recession coming in the middle of this year. Now, we've actually heard a lot of optimism here in Davos, but at the same time, we know certainly in the U.S., the Fed's been continuing their quantitative tightening. They have continued their rate hikes. We anticipate, and the market's pricing in, another 2 rate hikes here in the first half of the year, along with the reduction of the balance sheet, which is not getting a lot of attention. You know, you've asked about credit. As we go through a recessionary cycle, what we can anticipate happening is that revenues will decline, margins and profits will decline. And as a result, credit will get a little bit choppier. We've seen a nice rally so far year to date. It's been refreshing change since 2022. But as we go through this cycle, we could anticipate spreads widening and there becoming more credit risk. In particular, one of the areas that we're a bit concerned about would be the lowest rated credits. And that would be both in high yield as well as in bank loans. So I think that's going to be an area for us to watch.
What are you seeing there particularly? We hear about so-called zombie companies who don't have enough cash flow to really service the debt. And they get squeezed pretty hard. And if they've been borrowing at essentially 0% interest rates, that's okay. If they have to roll over that credit at higher interest rates, are you seeing pressure on some of those companies yet?
Not yet. But we have to realize that we are seeing an incredibly large paradigm shift in the markets. We've gone from a QE world to a QT world. And that QT world is going to continue until the Fed's able to actually conquer inflation. Those companies that had ready access to capital and credit are not going to have that same access going forward. In fact, as capital gets rationed, those companies are going to suffer. So while we're coming into this cycle, and I think there's a room for some remaining optimism, and as we've seen here in Davos, but what's going to happen is that those companies that have had a tailwind in credit, up in credit ratings, access to capital, great earnings. Even the zombie companies have had a nice tailwind. That's going to shift. And as we go through a recessionary timeline, we start to see that happen.
What about private credit? We had, I believe, an enormous growth in private credit, particularly with some of the regulations that were put in after the great financial crisis. What is the effect of the downturn that you anticipate potentially on private credit?
So, private credit is a very large label for privately issued in the debt markets. And like any other market, there are participants who know exactly what they're doing and underwrite credit properly. And there are going to be participants that, because of quantitative easing and because of ready access to capital, have made poor decisions. And just like zombie companies that have attracted capital, we're going to see the same problem. The challenge with private credit, though, is it's private. And the transparency just isn't there for the markets yet.